the SP 500 and the Nasdaq 100. We're going to get right into the content, not waste too much time. Now, the first thing I'm going to talk about here is going to be the SPY and locally where we are at. Now, I'm on the 2-hour time frame, so you can see we're going to get a little bit fuller screen here. As you can see, I want to highlight the major level of basically where we tested yesterday, and then ultimately where we're kind of coming back into here on the end of the day, and still making a little bit of a lower high, but we'll get more into that here in a second. So basically this 389, 390 level is a massive level. And then if you look a little bit more into what happened in December, if you don't know, basically from mid-November, November 10th, all the way until around December 10th, December 13th, you stayed in a range of basically 390 to highs of locally 410, 409. With the low end of that being around 403, where you just kind of spent a majority of that time chopping range, bound back and forth, back and forth. Now, if we really look at this area, we can see that this is kind of where we tested yesterday. The 393 came to that 392, 393 level, and then kind of got rejected. Now, I want to show you something really interesting, and then we're going to break this down. This is on Flowago. It's one of the coolest things they have on there. It's called their equity levels. I'm not sponsored by them, and honestly, I'll probably be switching from this platform at the end of my subscription. It is an options flow platform, but I don't like what they're doing with their flow. They do show you all the information, but they kind of pick and choose what's automated to you, which I hate. But this is their coolest part. It's their equity levels, and it kind of shows you where a majority of volume is traded. And if you know anything about me, you know I love my volume. So if we look here, we can see one of the largest portions, the largest areas traded, particularly with volume on SPY, is 389.95. Okay, around $8 billion worth of liquidity has been traded here. And if we look back, you can see this is one of the highest rated levels, right? It was previously around, 391, but this is kind of bumped up since then. 421 is also a very big level. You can go back a little bit further. 438 is a big level. And this is basically over the past year, 2 years, give or take. So 441, massive levels of liquidity there. So anyways, you can see there's very few levels that get above that 90 percentile. And when we come into 389, it's at a 93. It's a very good range to look at. We looked at this previously. I just want to highlight what's going on here and kind of the determining factor that's playing out here right now. So if we look, we're pushing in and we're not really getting rejected. It's just where we're at right now. Now, if we come into a smaller time frame like the 15-minute, I'm going to go into Nasdaq and things like that. I just want to spend a little bit of time here on SPY today. You can see basically yesterday we came in, rejected, we open up on the day here. We kind of open up a little bit low, come back into 389.9, and then boom, reject once again, pushing back. And then we come back into it into the day, the 389.95 again, reject, and then into the day we get a little bit of a push through. Interesting behavior to say the least. Now, let's talk a little bit about what happened on the day. So I believe yesterday a large part of that sell-off was to do with the fact that Powell was talking this morning. However, the Fed did come out and say basically 30 minutes before he did speak that he would not be making any remarks specifically on the U.S. economy, which he did not. He did not make comments on our U.S. economy. It was more of an education type little forum that they had, if you want to say that. Now, if we look at today's volume, I think it really describes what happened. I think we had a little bit of momentum. We thought something was going to happen. It didn't come out, and then boom, 64 million. So that is important to know. And if you wanted to see this information and know that it was missed, it was also on Twitter, which is why I always recommend people follow me on there. I think I retweeted it this morning. Before we get into any more content, I have to ask you to do two things: like and subscribe. It helps with the channel tremendously. And I'm always posting my unbiased opinion every single day here on the channel, whether you think the market's going up, down, sideways, whatever the news is giving us to us. And I'm going to break it down in a fundamental way and an easy way for you to understand. It's a mix of fundamentals and technicals. That is what we do here on the channel. Let's get back to it. And just so you know, the Twitter link is down below, so you can get all those updates as well, getting chart updates when we go live throughout the day as well, going over the market. So let's get back in this. So when we're looking at these charts, you got to be a little bit careful, but I want to spend more time here on the futures. I believe we got a little bit of an answer what happened here. This was interesting behavior. But as we get back into NASDAQ, I don't think you're done necessarily with the bull case or bull theory. As I mentioned yesterday, my thesis still stands on going into these rate hikes. I assume, and if I had to give a guess, which again, this is my educated guess, I had a comment basically today. I do want to highlight this comment just to say my opinion here. Again, I encourage you guys to question everything I say, but I don't appreciate when people lie or kind of twist what I say. But I've kind of had this thesis for a while, so you can go watch those previous videos, and I recommend you watch previous videos so you can, if I'm wrong or if I'm lying, call me out. But basically, this guy said that I said that Powell was going to say that there was a 25-point hike coming today, and of course I didn't say that. That makes no sense. He also said that I said that Powell was going to be dovish today, which I assumed if he was talking about the U.S. market that he would be. It was my educated guess, period. The end. I can never know, or I'm never going to confirm or tell you this is what's going to happen tomorrow when I don't know what's going to happen. I'll give you my educated guess and just my opinion based on fundamentals and technicals. But he was not hawkish today because he didn't say anything on the market. And if he was hawkish, maybe he should be hawkish every single day, and the market will continue to go to the upside like like it did today. So anyways, as we jump back in here, I want to highlight that. Now, my assumption based on the data pool that we're going to get, I assume CPI is going to come out decent, okay? We also had a statement from, I believe, Morgan Stanley. I retweeted it here. So JP Morgan, close, they're all basically the same, am I right? JP Morgan's trading desk sees CPI bolstering a bear market rally. So they see possibly CPI helping this out, okay? They see it helping this figurative rally that we're having right now. So again, I think based on the market, it's also trying to price that in as well as we are moving forward here. Now, what I do want to say, if we go into investing.com, and I always show you guys how to do this because it's one of the easiest and simplest tools out there. You go to news, you're going to go to economic calendar, and the end, you're there. Congratulations. We're going to go to this week specifically and go down to Thursday so you can see. Go to Thursday, where you at, so you can see. It'll show you the past data as well. So if you want to go in here, we're going to go to core CPI. We're going to go down to, let's go to right here, year over year CPI. Now, if we come in here, let's talk about a few things specifically. Based on our last one, we came in on November from October CPI to 7.7, down from 8.2, about a 0.5% drop. Then we came in again from 7.7 to 7.1, a 0.6% drop, which was really bullish. It was really good for the market. We had a nice little rip on that news. And then we have a 6.5 expectation now. Now, what I want to make very clear here is as we're looking at this, as you drop, I have to anticipate the speed in which CPI or inflation starts to reduce is going to drop, if that makes sense. So when we're at the highs of 8.7, I could see us dropping pretty quickly or getting some, like a snowball effect in the beginning of going a little bit slow and then speeding up quick, maybe getting down to 5%. But I want to say, once you start hitting 4-5%, I do expect the forecast. Let me not even say forecast. I do expect the actual CPI data pool to come out to slow down tremendously. However, based on what Powell has been saying, okay, this is based on what he has said. He has said very publicly that the unemployment numbers, the Fed can't really control. What they can control is what's happening with this data pool as far as demand and then what's happening, based on these inflation pools. And if we look at this, they've been coming out positively. Now, people commented on my last video like, well, Tyler, if you see CPI coming out positive and you think Powell has something positive to say about the market, that means a bottom's coming or bottom's here. That's not what I mean. If you watch the live streams and you get a better in-depth view and can answer and ask questions and I can answer them for you live, I believe I give a better viewpoint. But unfortunately, I can't go live all day long. It's just not the world we live in. So that's where we're at right now. So I do want to say that. I do think we can have a bullish outlook from some of this data that's going to be given to us. I want to make that really clear. Now, does that mean I'm going heavy in the market? No. Does that mean that I'm just YOLOing into calls? No. I'm very clear about what I'm saying here. This has been one of my slower beginnings of the year, possibly ever. Past 10 days, the trades have been extremely lackluster. The volume specifically has really been my kryptonite when it comes to trading. And I can say right now, just my trading personally has been really choppy, back and forth, not great, okay? Every win I'm probably getting a loss right after. So it's just back and forth, back and forth, back and forth. So I'm really just kind of sitting on my hands somewhat, trying to wait until we get movement that I like and we start getting continuation. And what do I mean by that? Just really quick, I just want to give you an example. So I go to something like the Nasdaq on the 1 minute, just so you guys can understand where I'm coming from. Let's hypothetically say, you're getting, a bear flag, right? And then we're we're descending on volume, and then we'll just pop back up from bulls, right? So we're just getting kind of anomalies across the board, and it's just not, it's not good for my trading style right now. So it's just a little bit sporadic. It's really encouraged me to stay a little bit more patient, even though I've kind of gone against better judgment and, traded more maybe than I should have. Going back to the data, that's what we're looking at here. If you have questions, please comment down below. I would love to answer those. But I'm trying to make sure I can explain this in the simplest way possible. Going back over here into the market, let's talk about a few things of where we're at. Now, I think the market's actually really simple. Someone was asking me about my supply and demand zones. If you want these, I recommend just following on Twitter because I post them all the time on there, and you can just have a picture. You can literally just screenshot and save it. But yeah, so it's going to be on there. I'll post this picture so you have it, but obviously our supply still remains the same. This is a 4-hour supply, just so you know. 350 to roughly 390 on NQ. Previous supply we had back here was around 1115, and you can actually see right now, granted we made some lower lows here for a little bit, but you're holding that area. So again, this has me kind of relating back to the bull thesis, even though the movement isn't ideal. Like, and when I say ideal, you go to the 15-minute, it's a lot of wicks, right? This is a lot of dangerous trading because this is designed to stop you out. It's designed to make you lose, but you are nonetheless holding that previous resistance that we had. So I do want to say that just so you can see it. Going into ES, maybe a little bit easier to see here, but as we look at ES, I'm going to go really quickly to the 2-hour, so we're not taking too much time here. You're still trying to hold above that, 39.22, which is doing really well. I do want to highlight that is holding well, and if you want to get a visual of what that is, it's basically your previous swing high that you had about right here. You are holding above that. Now, you had a few levels of pushing down below, but again, you're bouncing back. Good note there. So I want to say this right now. I don't believe you're going to get a clear direction to the upside, to the downside until after CPI right now. You're going to be kind of range bound, chopping back and forth, and it's going to be designed to kill the day traders right now. I'm going to tell you right now, can you make money doing this? Yes, you can. You can probably trade better than I am right now. I'm not going to lie to you. My day trading is solely based on supply and demand with volume. That's my strategy. That's how I trade. So when volume gets sporadic and when it's a little bit random, when you get increases all over the place from buyers and sellers, my win rate typically drops, and that's what's happening right now. So the best thing I can do is just wait for the market to give me what I want, and it's not giving it right now. As far as ES, if you're looking at demand here, or supply, I should say, you can see you had a range right here at 39.50, 39.60. You broke above that. Your next level is roughly going to be right about here, up to like 4,011, all the way to 39.90. So I still think you have room there. You haven't even tested it. That's going to be your next target here on ES. Obviously, 4,000, big round number. It has to have your, attention right now. Going to some of the more interesting indicators. We're going to look at VIX, DXY, and then yields. We haven't looked at yields in a minute. Now, when we come into DXY, where are we at? Kind of funny where we're at, people. We're back at this $19, $20 range, and this has been our moneymaker. I'm not going to lie to you. Even though I'm not, heavy into a swing or anything like that, this is definitely getting my attention to where I'm looking at it and saying, I'm definitely gaining traction and gaining interest in swinging something at least a month out for the downside opportunity. Every time over the past year, what's happened when we hit this range, going all the way back to January, we get some increased volatility, which has led to downside on pivots on the market to the downside, okay? August, March, January, beginning of December, right? These were all of the pivots that we've had on the year. Go back and look at them, at least to the downside, right? Important to view. Think we have to be looking at it. It definitely has my attention. The US 10-year versus US 30-year. Last time we looked at this, it was breaking down out of trend, and you're still doing it, right? You can see that we kind of consolidated on that level, right? Very important to see. And for you new people here on the channel, as you zoom out, the 10-year over the 30-year, you can see we've been holding this trend for basically 2 years, and now we're slowly trying to chop out of it. This is interesting behavior. We need to be keeping an eye on this. Volatility from this point will definitely have all of my attention. I want to say right now, though, the 10 and 30-year are not irrelevant just because you broke out of this. I would still be keeping my eye on this. You're still well above the 95% inversion rate, so you're almost back to fully inverted. You need to keep your eye on this. Very important. Looking at something like TLT, the reaction that we've had on TLT over the past 2 days has been probably the most interesting. If we look basically since we made that high on Monday, let's talk about this, right? So if we look at that, what's happened here? You make this high going to the end of the day. You even have a high push on Friday locally. and then you break down what happens on the day. You get kind of a bear flag forming out here on TLT. The fact that TLT was dropping today while the market was going up was a little bit concerning for me, and it doesn't give me a lot of faith in the market. What I do want to say, a lot of people are talking about TLT, and I see people in the live streams, and live streams are a really great way for you to give your opinion on the channel, so I can go over more things that you guys want me to cover. TLT being one of them, right? So a lot of people are asking about TLT. This $99,100 is going to be a major level. I want to say that right now. Now we can look at flow algo really quick. I don't think the data is going to be there right now, but we saw about a week, 2 weeks ago, there was a lot of put buyers and a lot of bears just storming the market for the downside opportunity, specifically on TLT. And now you're seeing kind of TLT stagnate. You're seeing calls come in. You're seeing a lot more slower movement specifically. So I do want to highlight that. So TLT, it's not as interesting of a play as it was back here when you were at 110 and we were calling for that 100 retest, but it's still an interesting play nonetheless, and it's a good way to get traction of going into the market for the next day or weeks to really know if the strength is really there, if people are actually buying into the market, right? Going to DXY has officially broken down out of this level that we talked about from basically 103 to 104. Now, what I will say, the next level here on DXY is down to 101.9. Been calling this for a few days, and you're kind of getting a perfect retest. You can see this range that we were in, and as we zoom back in, you can actually see you are bear flagging underneath. You have to anticipate a bear flag will break towards that downside and continue to get that continuation, specifically with what's happening with China and the rest of global markets. So that's my opinion there specifically. I want to make sure people understand exactly where I'm coming from here as far as the market. So if you have questions, again, I really encourage you to ask away. I will try to answer them. But again, I'm not going to really respond to like negativity here on the channel because I do try to be as transparent as possible. Winners, losers, right or wrong. I always try to tell you, what I did wrong. So again, that's my viewpoint there. Going into tomorrow, stocks I'm liking the most. Apple's been showing quite a bit of weakness, and if you don't know, Apple did release some news as well. Posted this on Twitter. I'm going to go over here to show you real quick. Apple latest App Store revenue stat shows a slowing growth. I definitely think this will come out on their earnings balance, on their earnings statement. Very important to be keeping a viewpoint of. What has Apple been doing? They've slowed down production of all goods. Okay, slowed down the production overall. 2, now their App Store is getting hurt. This is kind of a big deal. I don't know why people aren't talking about Apple, why they don't see more pain. Pretty wild. Anyways, that's what I'll be looking for specifically. If crazy people, this is bullish. I don't know how it's bullish, but anyways, that's what's going on specifically here and what I am watching. So Apple, I think it's a little bit weak. You did mount that to 129 level. Keep an eye on it, but I still see weakness coming out here. Tesla, you had some bad news come out of China today. If you don't know, basically they announced that they're going to be doing cheaper prices for, I believe, the Model Y and one of the other cars. Anyways, people are outside the factories demanding a refund based on the cars that they bought because they believe they should be getting them at a lower price. And that's kind of what inspired the downside here on the day, I believe. From that viewpoint, started getting a bounce with the market. And I always say this, I can love a stock to the downside all I want. I can believe Apple's the most bearish stock in the world. But if indexes are ripping towards the upside, what do we always say? Don't fight the trend, right? So during the when the market's pushing up, I'm not trying to short the weakest stock, right? I'm trying to go long on something that I like. Even though I didn't trade that much today, and the trade I did have was an Apple loss, I will say, I actually had a Tesla win this morning, but I will say, looking at this, you just need to keep your guard up, be careful, and just don't get greedy when it comes to trading. Specifically with the day trades, I believe it's all about scalping right now, getting in, getting out, getting your money, taking the wins, and not getting overzealous. Because again, that was the mistake that we made in December. We had great plays, Home Depot, Nvidia, Microsoft, Meta. We had great wins. We had great plays, right? But we could have maximized those profits by just not being greedy. And again, I'm just trying to help you guys learn from my mistakes and things that we're doing here on the channel. So again, have a good one. If you have any questions, comment down below. I'll see you tomorrow.